these last couple rate drops,
Yep.
June and July, right? Dropped 50 basis points. So there's been a lot of noise around how this is going to impact the Canadian dollar because the US hasn't moved yet, right? When the Bank of Canada rate drops while the US Fed holds, it typically puts downward pressure on the CAD.
Yep.
Right?
This is my other big thing with us compared to the States is our GDP is so propped by real estate.
Mm-hmm.
So like 35% of our 55K is real estate based.
Yeah.
Whereas for them, it's like only 20%. So like 15K of their GDP per person is based on real estate. Whereas for us, it's still 15K, but our GDP per person per capita is 50% lower. So it's such a larger impact. And real estate isn't money that you feel in your hand that you can spend.
Right.
It's wealth.
So you're saying they have a healthier GDP than us, a leaner, meaner GDP than Canada?
Hey, thanks for tuning in to the Canadian Private Lenders Podcast, the show about starting a private lender in Canada, the mortgage industry, and the real estate industry. Your hosts are Neal Andrino and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 45 of the Canadian Private Lenders Podcast, presented by Mortgage Automator. Neal, how you doing today?
Pretty good. A little tired. I think I say that every single time. Also feeling excited because did you notice the road on the way into the office is finally being stripped? And well, you ran here actually, so maybe you didn't.
I did.
You didn't notice it because you took a different route.
Yes.
But they're stripping the main drag, which is like a minefield, usually driving in like Ailsley.
Oh, coming past the Timmies there.
Yeah.
Oh, that's a disaster.
That's got to be one of the worst roads in the city.
Disaster. Yeah.
And I don't understand. It's been that bad since I moved here, which is 6 years ago.
Yeah.
Moved to this office. And now they're finally stripping it. I'm like, oh, yeah. Thank the Lord. Like,
yeah, that's bad.
You're driving like two hands, swerving back and forth because there's like mega craters everywhere.
Yeah.
Anyways, I was excited to see pylons, and I was like, oh, nice. They're finally pulling this out. I hope. They might just be doing a sidewalk.
That one's real bad. The one benefit there is you could at least see them coming.
Yes.
There's one over by my place on Caledonia, kind of near where you went to high school.
Yeah.
And you can't see it. It's right after a stop sign, and your car literally sinks. And like I've had headaches going over this bump before. The disaster. But
is there not a case where if you damage your vehicle, you can go after the city? Is that a thing?
I don't know.
I feel like a bit of a psycho saying it, but I remember once there was a pothole on the highway. There was literally a lineup of cars just parked on the side of the road that were just all flats. Like it was such a I saw the pothole, I was like, holy shit, and I swerved. And then just lining the sidewalk, the shoulder, lining the shoulder, there was like 3 or 4 cars, 4 ways on, double flat, double flat, double flat, double flat.
Ridiculous.
Like,
yeah. I mean, that's dangerous on the highway, right?
Very dangerous.
Yeah.
But
wild.
Anyways, hopefully it's going out.
We're going way off board today, but we're going to talk about the Canadian dollar today. I know you guys touched on this in a recent episode of the Master Keys as well, but we're going to talk about, your favorite, the CAD.
Yeah.
We're going to talk about how the rate drops affect the Canadian dollar, at least historically, and kind of what we're seeing now in the market as well. But before we kick that off, Neal, I flipped you this article the other day. It got quite the interesting headline, and I'll kick it off here. It says, it's maddening to say, but now might be a generational opportunity to buy your first home. And yes, this is in Canada.
Well, I feel like a lot of people hearing that are going to be like, how? For me, I'm like, I don't know why they feel it's maddening. But again, this is, I guess, a clever headline to drag you in.
Yep.
Continue.
This is by Rob Carrick too, and he's like very well respected reporter for the Globe on finance and mortgages.
Okay.
He kicks it off by saying, as weak housing affordability is right now, as weak as it is, aspiring young buyers never may see better. And he attributes this to mortgage rates declining lately and home pricing moving basically sideways or down on average on a national basis, right?
Yeah.
So I'll give you a couple of the highlights here as well. In many big cities, houses are very far from affordable for first-time buyers without high incomes or high-income parents. But Canada's housing market has a few things going for it, starting with the religion-like belief that owning a house is a flat-out, no-question financial win. And I think that's accurate, right?
Oh, yeah.
Historically, at least, right?
Yeah.
So maybe that's going to change. This has not been the case for those who bought at the peak of the market in 2021, 2022, but boomers and even Gen Xers have cleaned up on home equity in the past decade or more. And he basically continues to say, falling interest rates are direct support for housing. The July numbers in the resale market conditions suggested rate cuts to date haven't done much to revive housing, but basically stating that eventually this could spark the market here, especially because we're expecting to see, probably multiple more rate cuts in the balance of 2024 and several more in 25, eventually we're probably going to see a spark to the market, right?
Yes. Which, I mean, this is something I find funny now. You can find a headline going either way. Like, I was reading the news this morning and there's a bunch of headlines that are like, house prices are surging. And then the other ones are like, the market's falling apart, condo market's collapsing. And so if you can swing it either way. To his point, the realtor in me, I think it's kind of funny. It's like always a good time to buy, always a good time to sell. But I actually agree with him. And we've been, my partner and I have been expressing this a little bit with our team and with our clients, that it seems, especially this summer, that activity's down. I think people are fatigued, combined with money has been a little bit expensive. Not a little bit, has been very expensive. And house prices were out of sight. Now there's a volume has decreased, inventory has increased, which has softened the market up a little bit, giving you a few options, giving you the option to negotiate. Prices are a little bit less insane. And a fixed rate mortgage now, like we talked about last time, let's say mid fours, you can get it in a insured product. So for a first time buyer, it's not the worst marketplace ever. Yeah, I would say it's better than it's been for the last 4 years.
Yeah.
It's a bit easier.
Yeah.
So yeah, I think he might be right. And I think doubling down to the point of why it might be really the time is probably by spring of next year, if they continue the way that we're expecting them to with the rate cuts, I suspect that the housing market will be pumping again. And I know everyone's saying the economy will be down, which I agree with. But I think all the new to Canada people, we've talked about this before, they have the mindset of, they already come here with the mindset of wanting to own, like they don't want to rent. And then additionally, the Canadian culture is to own. And there is this religion that owning is it, which I think will drive the housing market, even though the economy is not necessarily doing insanely well. So yeah, I think you should be making a move right now to buy. But it's a tough sell right now. Like seeing it with my clients, and like Chandler's been saying this to me, like he's like trying to convince someone that now's a decent time to buy. Everyone thinks the bottom's going to fall out of the market,
right?
Which I'm not convinced. I think the bottom might fall out of the market on the investment real estate and commercial real estate. I don't see it on the res side.
Yeah, and it's interesting too because obviously the bulk of this perspective is based on the Ontario's, GTA's, Greater Vancouver.
Yeah,
those markets that have softened a little bit in the past 2 years.
They've cut some pricing.
Maybe it is the best time ever to get in there now. Or best time there will be for the foreseeable future. But we've talked about the market here locally in Atlantic. We've gone way up too, and it hasn't softened at all. But I think if you ask kind of general consensus here, it's going to probably stay flat for an extended period here.
Yeah.
So who knows? Is it the best time to buy right now, or will it be a little softer 2 years from now when rates are a little cheaper? Who knows? Who knows?
Yeah, I agree with you on that.
Not financial advice, though, right?
Never financial advice. Can't tell you when to make the purchase or when not to.
Impossible to time, but it's an interesting perspective.
The other thing that's funny, I think, with housing, I think that no one really talks about is like it doesn't really make any difference in some sense because almost always you're buying or you're selling to buy. So you're not leaving.
Well, not if you're a first-time buyer.
Not if you're a first-time buyer, you're trying to buy in at a certain point.
Yeah.
So yeah, that's different. But otherwise, for like people who are selling and buying, like it doesn't really make any difference. If the chart's going like this and you're selling and buying along, it doesn't make it. You're still riding along it.
Unless you're like, upgrading neighborhoods or something like that, right? And selling in a place that's less desirable, but
that's different.
Yeah.
If you're selling a product that's great and you're buying a poor quality product that you're going to make better, or you're playing neighborhoods and stuff, that's a different game. But if you're trying to play the general market, anyways.
Yeah. Interesting.
Yeah. Not a real estate sales podcast, but call me if you want to buy something.
I've been in the private lending game for a while, and let me tell you, Mortgage Automator is the ultimate software for private lenders. It's been a total game changer for our business. I've scaled 2 private lending companies, and I couldn't have done it without this software. The Mortgage Automator team truly understands the challenges we face, and they're constantly thinking ahead. For example, they've developed new anti-money laundering and know your client tools to keep you compliant with the latest FinTrack regulations. And their platform is SOC 2 compliant, ensuring your financial data is secure. This software eliminates almost every admin burden you can think of in the private mortgage business, saving us thousands on staffing costs. No more manually typing term sheets or tracking files in Excel. So whether you're a new private lender looking for an efficient solution or an established lender aiming to scale up, Mortgage Automator is the solution for you. See if Mortgage Automator could be a good fit for your unique lending needs at www.mortgageautomator.com/switch. All right, let's get into it, Neal. So just want to talk about, these last couple rate drops, June and July, right? Dropped 50 basis points. So there's been a lot of noise around how this is going to impact the Canadian dollar because the U.S. hasn't moved yet, right?
Yep.
And basically, I pulled this from the Globe and Mail. Globe and Mail states that when the Bank of Canada rate drops while the U.S. Fed holds, it typically puts downward pressure on the CAD.
Yep.
Right? Now, pulling some data recently so the pre-rate drop, CAD to USD was averaging around 74 cents, 73.5.
Yep.
Okay. So the June rate drop happened, dropped 1 cent to 72.5.
Just substantial.
Yeah, it is. But it bounced back by late June.
Yeah.
Okay. Leading up to the July rate announcement, it kind of fell down that 1 cent again, and it had fallen to a low of basically 72 cents.
Yeah.
It's currently moved back to 73 cents.
Yeah.
So just shy of where it was, basically a half cent of where it was with 2 rate cuts. So it really hasn't moved a ton overall. Do you have any initial thoughts on that?
Sort of. I mean, yeah, it started dropping off as we cut our rates, and I was screaming about that, and other people were screaming about that, and it makes sense why it was happening. I mean, we're going to talk about it here in a sec, but just what's taking place in the U.S. is what's impacting that and causing that to come back up. And now, as we go through this, I'm like, oh, maybe BOC is smarter than I think. But I was never anti BOC, but I actually am seeing how this could play out to be decent for Canada. But anyways, I'll let you continue.
You're not anti BOC. You're just doom and gloom on the CAD, I would say.
I am doom and gloom in general.
And I heard you guys talking the other day. And I'm gonna dispel a couple myths today with a couple data points. So just a little heads up here, okay?
I'm into it.
So let's go a little further into this. So basically, part of the reason why some economists think that it hasn't moved a ton, the Canadian dollar, is that markets are expecting, or it's already baked in, that the U.S. Fed's going to decrease rates in September, right?
Yep.
So, and that'll prevent, significant divergence between the Canadian and U.S. Dollar based on their rates staying relatively in swing, right?
Yep.
So, and basically Tiff Macklem had said as well that there's going to be a limit as to how far the Bank of Canada can get ahead of the Fed easing.
Yeah.
And reason being basically that would feed into inflation, pushing up the price of imports.
Yeah, 100%. Right? And that's always been the concern for me with this, is it actually ends up feeding more. It's going to save our real estate market, so people are still going to feel wealthy in that sense, but on a day-to-day, they're going to feel poor. They're going to be house poor with these movements. I think the one thing that's not being talked about immensely, but I actually get a little bit of data from my friends who live in the States, is it's starting to come out now. Like, first of all, the American economy is not doing as well as they had been touting. Mm-hmm. The big one that came out recently is they misquoted the job data. So this was like, one of my buddies, he's down southern states, and he sent me couple articles being like, oh, like the job data was misrepresented by like 1 million jobs, which is huge. Even though the States is massive, like that's still a massive change in percentage. And he was like, I knew it because I could feel it. Like, it didn't seem like things were doing as well as they were saying, and as per the data and this, that, and the other thing. And he's like, now it's coming out that there was a bunch of mistakes made in the data, and they over exaggerated how many jobs were staying in the market, and unemployment's actually a fair bit higher than they had said. And basically, where I'm going with this is that the U.S. economy, again, isn't doing as hot as they say it is, mm-hmm. which also will result in the Canadian dollar being worth a little bit more. If the U.S. economy was crushing it and the Canadian economy was not, obviously there's less demand there for the Canadian dollar. It's going to fall. But kind of what we're seeing with the fact that this is rebounding a bit is that maybe they aren't outpacing us as dramatically as we think. That being said, I still think the Canadian economy is riding very, very flat. But I also think there is some value in having a lower dollar, which I touched on last time, which is like reduction of capital flight, which I think we were having a lot of, and I'm probably still having a fair bit of. But I know coming out of COVID, a lot of people want to take their money out of Canada.
Yep.
I think this is slowing them down when you think you're going to take like a 30% haircut.
Yeah. So just back to some of your points. I was listening to you guys yesterday on the Master Keys, and I completely agree that Canada versus US, Canada's lagging behind, right? And you guys went through like the historical rates as well. Mm-hmm. It was actually as high as par about 15 years ago, 10 to 15 years ago. But I think Chandler had mentioned as well that he always sees the Canadian dollar as around, high 60s, low 70s. And I feel the exact same way. I think him and I are the same age or around the same age.
Yeah.
I always see it the same way. So this is very normal to me that we're sitting, low to mid 70s right now, right?
Yep.
So yes, I'd say Canada is lagging the US. But if you look at this chart we've got here, okay, this has come from one of my favorite newsletters from TLDR newsletter from Well Simple. And this basically plots the GDP per capita for all like the top 8 world powers, okay?
Okay.
And you can see US is way ahead, okay? About 75K.
Even 80K, that thing is striking.
Yeah, maybe even 80K.
I'll say 75, yeah.
Yeah. But every other country, Canada, Australia, Germany, UK, France, the EU, and Japan are all lumped into the same range. So basically the point, the title in this one is basically saying that Canada is holding its own wealth-wise.
So, okay. So a couple things for me as someone who bitches that says, I don't think we are, is first of all, we're right next to the States. So like the immediate comparison for like, just like feeling and sentiment.
Sure. It's the most important comparison.
Yeah.
I'll give you that.
First of all, it's our biggest trading partner, all those things.
Yeah.
But outside of that, like on our social platforms, who am I going to see? Am I going to see a bunch of Australians, Europeans, or am I going to see a ton of people from the States? Probably people from the States.
Yeah.
TV, we watch American TV, like we see stuff, we see American news, like we're involved heavily with them. So the difference between us and them is almost 50%, say 40%.
Yeah.
So that's where I'm like, you feel, because it's just an immediate, like we have such a big border with them, and we talk about it all the time. Like, damn, like a house here is 700, and then you literally walk 100 feet that way, and it's 300.
Yeah.
And they have technically the same incomes, but that income over there buys that house for 300. Our income would have to buy that house for 8. You know what I mean?
Right. I think it's very nuanced by market though too, right? Like it's tough to compare. Like, are we comparing Niagara Falls, Ontario to Niagara Falls, New York here? Are we comparing Toronto to Los Angeles, right? Like it's like,
I will agree.
And again, we're talking over broad averages as well. I'm not trying to discount your argument about the USD being stronger and the GDP per capita being significantly more. That is a significant gap.
So, and here's my other couple items. We're also very similar to Australia in dollar value and the way we operate.
Yep.
And they're also about 20% ahead of us.
Okay.
So those couple things, I feel like the EU's like past its crazy growth window, and the EU's turned into a very much like, I don't know the terminology, but basically there is the very rich and there are pretty much everybody else.
Yeah.
And it's like insane there. Like they have in their downtown, the houses are $300-400 million, like out of sight. And then everyone else lives in a normal house.
The wealthy own the homes. It's a renter's market.
Completely rentals market.
In all big centers in the EU.
And they have like mega families that own like all the coal production, or like all, like it's like a movie. And then
for sure.
Whereas Australia, Canada, and the States are a little bit more still, a little bit more spread. I mean, again, the statistic would say, yes, I know 1% owns whatever, 35% of the economy. But the other thing is our GDP is so propped. This is my other big thing with us compared to the States, is our GDP is so propped by real estate.
Mm-hmm.
So like 35% of our 55K is real estate based.
Yeah.
Whereas for them, it's like only 20%. So like 15K of their GDP per person is based on real estate. Whereas for us, it's still 15K, but our GDP per person per capita is 50% lower. So it's such a larger impact. And real estate isn't money that you feel in your hand that you can spend.
Right.
It's wealth.
So you're saying they have a healthier GDP than us, a leaner, meaner GDP than Canada?
I think they have a more liquid GDP.
Sure.
Now, does it bode to like having the potential to explode a lot harder? In my head, I want to say yes. Looking at this chart, though, this chart goes back to 1980.
Mm-hmm.
The smoothest line is the States.
Yeah.
Like all of these, even over Canada, like 2008. I remember everyone said like the States got hit harder in 2008. Well, and this is my point. Actually, this proves the point. In 2008, it was a real estate crash in the States.
Yeah.
They had less of a GDP dip than Canada did.
Oh,
Canada took a way harder hit in 2008 than the States did. And so this is my whole point of like, you end up feeling really poor in Canada.
Yeah.
And kind of looking at the chart, you are.
I don't discount that. I don't discount that. That is very interesting. And to your point, the U.S. really only started accelerating post-COVID, it looks like. But otherwise, it's a completely steady line.
They've run
every other one has been very volatile.
Yeah, like there is some extremely volatile in comparison.
Yeah.
Canada's pretty good. I would say Canada's probably second. Australia is light, but you can see there's some massive swings in Australia.
Yeah.
And I'd say almost everyone else followed a similar path. Like, looks like in the late 90s, they had a huge swing. The thing that I find, I almost feel like we're like the weak link. Like, we're like the little brother to the States in the sense that, like, they can use us to help stabilize their GDP.
Right.
Like, they can abuse us. They can be like, all right, we're having this issue, but we can pass off some of that by using Canada. Like, we can pull cheaper imports and whatever we need to do.
Yeah.
Anyways, I do see what you mean. On a global stage, which is what I was whining about last time, we're doing fine, I guess. Compared to the States, though, they're still just trucking along. I'd like to see India and China on this, see what they're doing.
Yeah, that would be interesting. I got some data for China here. So let me go through currency data. Okay. So I pulled this before we jumped on here. So, and this is kind of leading to my argument saying that yes, the US is ahead, but we're right in the same mix as just about everywhere else. So I pulled the CAD versus all the major currencies in the world, the USD, the Euro, Japanese yen, British pound, Chinese yuan, Australian dollar, and Swiss franc. Okay.
Interesting. Okay.
Compared the 10-year average versus current and did an index to show how far off we are. Okay. So current USD is 0.73. Like we mentioned, the 10-year average is 0.76. So we're about a 96 index to that, about 4% lower than the 10-year average. Okay.
Yeah.
The euro, 0.68, 10 years average, 0.68 currently, 100 index, so it hasn't changed. Okay. Japanese yen, this one's quite interesting.
Well,
basically 92 cents long term, now it's 112. So we're 122 index. So Japan's been getting crushed.
Just pumping Japan.
Yeah. British pound, 0.58, 100 index.
Okay.
Chinese yuan, 5.1 and 5.3. So we're slightly ahead. We're a 104 index, about 4% ahead of average. Australian dollar, same thing. 107 10-year average, 111 currently, 104. The only one that we're significantly down versus is the Swiss franc. 0.72 average, now currently 0.65, 90 index. So basically 10 points down from average for the Swiss franc. And maybe the Swiss are just, they're always immune to, what the fluctuations in the world. But so basically the USD and the Swiss franc are the only ones down. Everything else is basically stable or the CAD's ahead.
The Swiss franc one strikes fear in my soul. Here's my more fear-mongering with Neal. I'm not 100% sure, but I feel like when there is something brewing in the global stage, people move their money to Switzerland. Yeah. Which would put upward pressure on the Swiss franc.
Right.
And so this I don't think has anything to do with Canada. I think this has to do with, like, the Swiss franc's probably doing pretty well right now.
Sure.
Because there's probably people just dumping cash.
Yeah.
And also when there's war.
Same to the USD in some ways.
Exactly. Yeah. And when there's war, and right now there's international conflict, and they're outside of the States, I'm sure there's tons of money that's being moved around that's getting poured into Switzerland. Yep. So I feel like that's what's causing that to be up in comparison. And I'm like, I feel like if that index gets lower, like that's, again, an indication of things to come or what's going on in the world. The rest of them, again, I this is interesting to me. And now, as I'm sitting here, I'm just being like, I'm almost like, I try every time, like, don't be so obsessed with the idea of going to the States. But damn, like, they are a powerhouse, man.
Yeah, for sure.
Like, they are just been a powerhouse for so long.
And I completely agree with your argument. I just wanted to take it back that it's not necessarily internationally that Canada's doing worse.
Yeah.
It's versus the US.
It's the States.
Right?
Who's so close to us. That's all we see.
Yes, for sure.
They're in our face.
Yes, they are.
It's when you look at your neighbor.
They're rubbing it in. USA, USA.
they have songs. They all scream it. They all put the flags on their house.
Yeah.
And they're just rubbing it in. It's like literally the person who lives next to you, and they pull up in like a Lambo, and you're like,
totally.
Really, man? Come on, chill.
Squeals their tires and rips out of there. Absolutely.
That's them.
Anyways. Yeah, for sure. No, that was an interesting discussion. I mean, it doesn't really provide too much insight into the Canadian mortgage market or where things are going or how it affects things. But I just thought it was interesting to kind of pull that back and take a more global view.
100%. No, you've opened my eyes.
Love to hear it. Anything else, Neal?
Nope. Thanks for listening, guys.
Thanks, everybody.
Hey guys, it's Neal Andrino, your co-host and your co-founder at Keystone Capital and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host here, Ryan McNeil. I'm the co-founder and president of Keystone Capital Group. Keystone Capital Group is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000549, and through FCMB, license number 88799. And keep in mind, the views of this podcast are for informational purposes only and is not financial advice.